PC, energy section, the oil. For the power sector, section will be led by engineer Belije Madu. While oil and gas will be led by Mr. Kelvin Manuel, and renewable energy thematic will be led by David Irinze. So we also have a time where we ask questions and also make comments, and then a closing remark by our co-facilitator, Ms. Rahila Thomas. So up next is the introduction. It's the opening remarks by a member of steering committee, Dr. Segun Adaju. You have the floor now, sir.
Thank you so much, Jackson. I hope you can hear me.
Yes, sir.
Please bear with me, everyone. We're in another conference. So my apologies. So good afternoon, everyone. My name is Segun Adaju. I'm privileged to be a member of the steering committee of the Industrial Policy Commission. So distinguished head of ministries, departments, and agencies, esteemed members of this great policy commission, the Industrial Policy Commission, especially for the energy sector, captains of industry, heads of associations, development partners, all our members, research community, ladies and gentlemen. It is my honor and a privilege to welcome you to our first General Assembly of the Industrial Policy Commission at the Nigerian Economic Summit Group. Today's session focuses on the energy sector principally, and is bringing together members of the renewable energy, power, and oil and gas thematic groups under this policy. The policy will host 3 sector-specific general assemblies. One is the energy sector that we're having today. The second will be for the manufacturing and mining sectors that will hold on the 9th of May at 3 p.m. And then the third will be the agriculture and marine and blue economy sectors, holding on the 16th of May. Further details about this will also be shared amongst all members of the policy commission. So following recent restructuring of the NESG policy commissioners, the IPC, and I'm saying Industrial Policy Commission, emerged as one of the 6 policy commissions that is tasked with driving Nigeria's industrialization agenda. Our mandate is to foster a conducive policy environment that promotes innovation, competitiveness, sustainable industrial growth, and inclusive economic development. We also play a pivotal role in shaping Nigeria's industrial strategy, facilitating cross-sector dialogue, and advocating for the implementation of key policy recommendations that will come out of the Nigerian Economic Summit that's held yearly. So today's gathering marks a significant milestone. Global energy and resilience. Nigeria's energy future must be one that balances economic growth, energy access, affordability, and climate commitments. It's an event where we're talking about the balance between transition and economic development. So our work must focus on reforms that unlock investments, deepen sectoral integration, and ensure that no Nigerian is left behind in the energy transition. The Policy Commission, and specifically the Industrial Policy Commission, brings together several stakeholders from both public and private sectors, civil society, academia, and also international partners. Through its 7 thematic groups. If you're aware, there's been some restructuring in the Policy Commission template and structure of the NESG. So we have 6 policy commissions, and under the Industrial Policy Commission, we have 7 thematic groups: oil and gas, power, renewable energy, marine and blue economy, mining, manufacturing, and agriculture. And the commission will seek to address systemic challenges that will enhance and that has always been a deterrent to productivity, and then give economic diversification through industrialization. This General Assembly is not just a forum for updates, it's a catalyst for strategic collaboration and policy influence. And your experience, your insights, and also your advocacy efforts are critical to shaping the reforms and also driving investment and navigating the complex but promising energy landscape that we have in Nigeria. So on behalf of the NESG and the leadership of the Industrial Policy Commission, I extend my sincere gratitude to you all for your continued dedication and partnership. Particularly look forward to our discussions today and to the actionable strategies that we emerge and to support this transformation of Nigeria's energy sector. I wish us all a very fruitful deliberations today. Thank you, and do have a good time. Over to you, Jackson.
Thank you so much, sir, for the insightful opening remarks. Up next is the presentation by think tank operation. I call on Daniel, Stephen Daniel, the senior associate operation at the NESG, to make his presentation. Thank you so much.
Thank you very much, Jackson. Good afternoon, everyone. Apologies, I'm unable to turn on my video as the network is quite unstable. Please bear with me. I'll quickly go into the presentation on the mandate, strategy, and the future of advocacy. At the NESG, there's a quote that we are known by. It was said by Kindle in 1984 that policy change and impact comes about when 3 streams converge: problems, politics, and policies. Each stream has its own force that is acting upon it and ultimately influencing it. The streams do not just converge by chance, but rather from consistent and sustained action by advocates like yourself on this call today for us to be able to solve all the problems in this sector. At the NESG, our vision is to become Africa's leading private sector think tank that is committed to the development of a modern, globally competitive, and inclusive Nigerian economy. And our mission still remains promoting and championing the reform of the Nigerian economy into an open, inclusive, sustainable, and globally competitive one. We have values and guiding principles, which you can find on our website and read in details. At the NESG, there are 4 strategic pillars and roles that we hold very dearly. We serve, number 1, as dialogue partners. Number 2, we serve as connectors. Number 3, as interveners where necessary. And lastly, as accountability partner, to ensure that what we say we will do or what the government says they will do, we hold each other accountable to deliver on the promises that we have made to one another. As dialogue partners, we get crucial conversations to happen that translates into decisions. We drive policy change through public-private dialogue platforms and engagement. As connectors, either government to government, government to business, government to citizens, government to business and then citizens. We drive policy change through networks and influence, expanding a network of enlightened stakeholders that are acting on the decisions that have been committed to. As accountability partner, we provide evidence-based advocacy, and as interveners, we drive policy change through interventions, monitoring, influential evaluations, and reporting. At the NESG, we operate on a model known as the public-private dialogue mechanism. Is a framework and structure that drives most of our work at the NESG. And under this structure, we have different platforms. We have policy commissions that strategically function within what groups known as policy commissions. We have roundtables. We have communities of practice. We have other special expressions, which I'll go to in the next slide. But across policy commissions, roundtables, and communities of practice, we have thematic working groups whose focus area are sub-teams in the different policy commission, roundtable, or community of practice. For instance, under this, the power sector is a thematic group under the industrial policy Commission. We have special task forces, a special task force on climate change that is helping to drive the climate change agenda in Nigeria. We have business councils, and then we have expert forums. Previously, we used to have 12 policy commissions, but we now have 6 policy commissions. And on the next slide, you will see the 6 policy commissions. We have education, we have Health Policy Commission, we have the Trade, Investment and Competitiveness Policy Commission, we have the Infrastructure and Allied Services Policy Commission, this particular policy commission, the Industrial Policy Commission, and then we have the Tourism, Hospitality, Entertainment, Creative, Cultural and Sports Industry Policy Commission. In terms of Business Council, we have the CEO Business Council on Food Security, and we have the CEO Council on Digital Economy. We have a special task force that I mentioned on climate change, the Expert Forum on Financial Architecture, a roundtable on human and economic security, and then the 2 community of practice, the community of practice on youth, and then the community of practice on MSME. As members of the volunteer call for the NESG, you'll be expected to become an active member of this particular policy commission. You'll be expected to attend at least one thematic group meeting that happens monthly. At least one of it is expected that you're there, and then 2 general assemblies a year. It is expected of every volunteer to contribute their quota, time, and expertise to identify thematic issues and action plan within that thematic group that they're a part of, and then support the thematic lead in preparing policy briefs, articles, position papers on the different thematic issues. Our value proposition to you is that as volunteers, you would have the opportunity to prepare your voice on a national scale, champion reform of a thematic area that is of interest to you, and also have the opportunity to influence policy, all in the national interest, working within a specific thematic group. You would also have access to in-house research and publications. You will receive outputs of published reports related to the thematic group that you're part of. You would also gain the opportunity to attend advocacy programs such as policy dialogues that we host, breakfast meeting, public lectures, roundtable discussions, and conferences that are not strictly by invitation. There are 7 guiding principles that guide our PPD mechanism. I will not go into the details of this. When the presentation is shared, you would have access to it. All of our volunteers are managed through our system known as the VMS, the Volunteer Management System. A link is shared. Next slide, please. A link is shared. If you're not yet a member on the VMS, please, we urge you to join the VMS today so that you're kept abreast of all that is happening within your own thematic group, within this policy commission, and within the broader NESG community. Thank you very much.
Thank you so much for the presentation. I'll call on our facilitator for the next session, titled Overview and Introduction of the new structure of the Industrial Policy Commission, after which she will go through the Nigerian industrial sector reforms agenda and pathways. I call on Ms. Lumun Amanda Fisi. Thank you so much.
Good afternoon, everyone. Thank you for joining us today. You're welcome to the Industrial Policy Commission. As the last speaker mentioned, the NESG restructured the last 2 speakers actually mentioned, the NESG restructured its policy commissions in December and pruned them down from 12 to 6. And for this policy commission, the Industrial Policy Commission, the aim is to accelerate Nigeria's industrialization in line with Agenda 2050, Nigeria's Agenda 2050. This new policy commission comprises different policy commissions, 2 policy commissions that were operating independently, and then also another one that was a standalone. So now the Industrial Policy Commission comprises these following thematic areas: oil and gas, The oil is separate. We've separated oil from gas. So I would say the oil thematic group, the gas thematic group, the power thematic group, renewable energy thematic group, marine and blue economy thematic group, mining thematic group, manufacturing, and agriculture. And then cross-cutting between manufacturing and mining and marine and blue economy will be as well as the oil and gas sector will be working on steel development as well. Now the focus is how do we bring these natural resources together in order to accelerate Nigeria's industrialization, and power is critical to achieving that objective. Other issues that are critical to achieving the objective, the NESG's objective of accelerating industrialization, is that this policy commission is going to collaborate with other policy commissions in the NESG and other communities of practice. So we will work closely with the Policy Commission on Infrastructure, the Policy Commission on Trade, Investments, and Competitiveness, the one on education, even health, and of course on SMEs and climate change. Now, why is this so? Like, Nigeria's comparative advantage is through its natural resources, oil, gas, mining, agriculture, forestry, and the maritime opportunities. But these have not been properly harnessed to support industrialization. Furthermore, Nigeria's young youth population, as well as cheap labor and position in physical position and access to regional markets and international markets, position it to catalyze industrialization. What we've noticed and observed in the Policy Commission is Nigeria has focused more on driving consumer or manufacturing consumer goods. So a lot of the manufacturing progress we've made since independence has really been focused on manufacturing consumer goods. And so you find the food and beverage section of the manufacturing sector thriving the most. And unfortunately, Nigeria has a huge dependency on imported inputs, expertise, equipments, and technologies. And without these, it's very difficult for a nation to industrialize. So that's the reason why in the Policy Commission, we are going to be working with other policy commissions, because the process of industrialization is not just about manufacturing, but it's about convening or integrating manufacturing with other sectors. So the key ministries that we're going to be working with here are the Ministry of Industry, Trade and Investment, Ministry of Science and Technology, Ministry of Education, and all the natural resource ministries, as well as even youth development. Now, NESG has been championing industrialization since its inception 31 years ago, and has made quite a lot of inroads, driven the Made in Nigeria initiative and other initiatives. So we're going to pull all of that together. And a key instrument that we're going to try to influence is that Nigeria needs to update its industrial policy and align it with the trade policy as well as the investment policy. So in the next couple of days, we're having several General Assemblies. Today, we're starting with the Energy General Assembly. The next one in a couple of days is on agriculture and blue economy. Then after that, we'll have mining and manufacturing, where we'll also discuss steel. And finally, we'll have a General Assembly that integrates all these discussions together and the NESG's industrialization focus. So we'll have an industrial focused General Assembly. And the key, what we're really doing through these GAs, sectoral GAs, is that each of these sectors that comprises the industrial PC have reform imperatives, reform issues that need reforms. So we're focusing on governance and the policy reforms in these sectors? How do we improve these sectors in order to achieve, support the aim of industrialization? So I'd like to just thank you everyone for attending today's event. And we invite you to please join the Policy Commission. We're all volunteers. All of us have our day jobs. And, it's a lot of sacrifice to do this in the interest of the nation. So if you're like me, someone who's tired of complaining, on your armchair or on Facebook, on LinkedIn, here is a great opportunity for you to work with other stakeholders in the public and private sector to influence change, particularly to get Nigeria industrialized. Thank you very much.
Thank you so much. Thank you so much, Ma, for brief shared. Do you want us to go to the next? Should I call on Madam Raila, or you're done with the industrialization, industrial reforms agenda, Ma?
I'm done.
Okay, up next, I'll call our co-facilitator for energy, Miss Raila Thomas, for key energy sector reforms and imperative. Thank you so much, ma'am.
Thank you, Jackson. Can you see my screen?
Yes, we can see your screen, ma'am.
You can see it. Okay, great. Okay.
Yes, ma'am.
I'm just all right. Excellent. Okay, so thanks everyone for joining us today. For everyone that's taking time to come, I'll just run through this quickly to get going. Well, energy sector, which is the General Assembly we're having today, is an integral part of human existence in any country. The president has set a goal for Nigeria to achieve a 1 trillion economy by 2030, with projections reaching $3 trillion by end of the decade. As of today, Nigeria's GDP is projected to be around $377.31 billion US. This projection was made by Trading Economics Global Macro Models and Analyst Expectations. And also the National Orientation Agency projects that Nigeria will be the largest African economy with a GDP of about 450 billion. Now, there are divergent views about Nigeria's ability to attain a 1 trillion economy by 2030. I just want to quickly check. Jackson, is my screen moving? Did my screen move when I changed pages?
Yes.
Okay, did. Okay, fantastic.
Yes.
Okay, so
full presentation mode, ma.
Yes, it is. Yes. So there are divergent views about Nigeria's ability to attain a 1 trillion economy by 2030, given where we are today. As I always say, that sometimes we can complain about everything, but we just have to start. We start, and that is what we are doing here at NESG to support this process. A number of factors have been raised, initiatives and thoughts in terms of how we can meet that target set by the president. Of course, one of it will be increased oil production, the target being over 2 million barrels per day. And then diversification of the economy, because we are overly dependent on oil for our revenues. So it's imperative that we diversify the economy. We need to attain self-sufficiency in refining of crude oil, and also expand the capital markets. In fact, there is a very strong recommendation to have NNPCL and other moribund state enterprises to be listed on the secondary markets. That this would obviously turn around perhaps the poor financial state of these state enterprises. The other one, obviously, which is big, and this is why we are here today, is energy. Energy, power, electricity. Clearly, this is important for us to industrialize. And so clear policy direction that will provide an enabling environment with incentives for startups and existing businesses to thrive and grow is very important. And this is at the heart of what NESG does in advocating and shaping policies and providing reform actions that the federal government could consider and implement. So energy is very, very important in our drive to meeting this target. On the slide before you, you look at energy and industrialization. I often say that they are the two peas in the pod. You can't industrialize without energy, and you can't get the maximum value from energy without industrializing. So the two are intertwined, and for one to happen, the other has to be up and running. We can see that through this 4 critical parts. You have transportation of goods, agro-processing, of course, mining and manufacturing and production. In the previous slides, you saw that all these energy products before us today all end up in the bottom to industries, residential, commercial, and public use. Those are the final off-takers or users of all this energy. So it shows how integral it is for our existence. And when you want to industrialize, the question to ask is, what does industrialization look like? What we try to do here is to show how electricity is consumed by customer groups and countries. We can see here that, and this is 2021 data from the World Bank. It shows here that Nigeria, the industrial customers use the least of energy. When you compare it to the other countries, Morocco, Egypt, South Africa, Indonesia, Brazil, and of course, the most developed here being USA. It shows that we are far, far behind, and it's a long journey, but we must get there. So for us to attain $1 trillion economy, we have to industrialize. It has to show up in the way we are consuming energy. You have in Nigeria 64% of residential consuming the energy that is produced. Well, I mean, that is the unproductive use of energy that exists. Residential is just consume it. There's no productive use from it. So we need to be able to change these numbers in a way that is reflective of the other countries, as we see here on the slide, to show that we are moving towards industrialization. We are moving towards economic growth and expansion and explosion. And so I wanted to show this to give a picture of what that looks like. If we're to industrialize, then the numbers in how we consume energy has to change to reflect similar, countries that are shown on this. I mean, look at South Africa, for instance. Only 20% of the energy consumed goes to residential, while 62% goes to industry. That is remarkable. So there is an example. The next slide here is just looking at it in terms of numbers. How much was generated in that year? 4,197 megawatt hour, and it's a split, 64%. Our greatest consumers of energy is in the residential segment, and that is not good. We need to turn this and have more industries consuming power from our national grid, because obviously the national grid will provide the most competitive price, and due to economic of scale. And if you're able to get that, then you have industries and commercial businesses producing or providing services and goods at a price that is affordable and is competitive. This takes me to the energy sector challenges impeding industrialization. With the oil and gas, we're looking at poor energy affordability and the subsidy framework. Now, subsidy, as we all know, has been removed. The petroleum industry has been deregularized in that sense. However, we expect that in being able to transition from the fossil fuels to a more sustainable environment or a decarbonized economy, then there might be need for the federal government to subsidize. So for example, clean cooking. From statistics, it shows that over 30 million households in Nigeria still use the traditional cooking method, using charcoal, firewood, kerosene, and all that. And I think less than 10% use LPG. Now, what incentives can the federal government put in place to have people make that transition from fossil fuel cooking to a much more cleaner way of cooking? So there is conversation, and there's a need for some policy or reform or fiscal incentive to make that happen. Low local refining capacity, obviously, we need to boost that to reach self-sufficiency. We have Dangote, obviously, but then we need much more to make it happen so that we can reduce our imports. There is limited private sector investment in oil and gas, we know that. For electricity, the same thing. Poor energy affordability and subsidy subsidy framework. Today, you have the federal government subsidizing the electricity sector. Last year, 2024, the balance for subsidy is about, which is unpaid, is about 1.8 trillion naira. The projected shortfall in revenues, which is supposed to be covered by government in 2025, is about 2.3 trillion. That's over 4 trillion naira that needs to be pumped into the power sector. It's not happening. So the question is the subsidy properly targeted? Do we need to look into this and ensure that it's well targeted such that it can, the generators, the gas suppliers can be encouraged to produce more so that, it meets the demand needs of the population. And the last one here is renewables, which obviously, if you look at it closely, you'll be seeing a fragmented policy structure. On this slide before you, from 2005 to date, there are a series of action plans, policy documents, policy postulations, and the question is, there's inconsistency in some of them, clashing targets, clashing numbers, and then you have different institutions sort of having divergent views as to how this will be achieved. So I think for us to really optimize or sort of make gains from renewable energy towards the path of having a much more green economy, there's a need to sort of address these inconsistencies and sort of ensure that there are no overlaps and we're all on the same bandwagon heading the same direction. I think that's very important. So certainly all these challenges have impact on the energy sector. Just to the headers, speak for themselves. The industrialization and business closures. We've seen a lot of multinationals and large companies exit the market in the last, at least last 2 years, and are stating that unsustainable business is the reason for this. Of course, with unreliable energy supply, as well as the high costs of now seeking alternative generation to meet that, to bridge that gap, it's making business not attractive, or is just killing businesses, and we see that from the big ones to the smaller ones. And what is that doing? Is destroying our labor market, because there are more of us going into that labor market because there's no jobs, and then there's no investment coming in. So that would obviously impact foreign direct investment, and that's not what we want. We want foreign direct investments to flow into our country for infrastructure development and to boost capacity. Lastly, on my slide, based on everything I've discussed, is looking at the key energy sector reform imperatives, which the thematic leads, starting from power, will speak to as to what NESG is looking at addressing to address all these issues I have succinctly raised. So decentralization of the electricity regulation is one that has happened through the Electricity Act from the 2003 Act. It has required that all states can now sort of participate in their own states, building their own or designing their own electricity markets. And this is a good thing, because then now it's more to the grassroots, and every state will tailor their energy needs and how that will be met in the most efficient, effective, and optimal way. Of course, we talked about promotion of renewable energy. This is very important. We need to diversify our energy mix. How are we going to do that? It's something that the NESG is looking into, and of course,
we can't hear you, ma'am.
Encourage, I'm almost done, and
Okay.
we'll encourage contributions. The headers are there, you get the slides. I want to thank everybody again, and we look forward to a very insightful session. Thanks very much. Over to you, Jackson. Thank you.
Thank you so much for the overview of our key energy sector reforms imperative. Then we're on to the next, which is our thematic areas. Each thematic group will speak about the agenda for the year. So I'll call on first the power sector, which is represented by our thematic lead, engineer Belije Madu.
Okay, yeah, good afternoon. Thank you, Jackson. I hope if you can hear me. Sorry, I will not be using my camera because I'm in a very poor network area. And to add to the bad situation, we do not have power here. So, and I'm in a government facility, Ministry of Finance to be precise. So that kind of summarizes the situation. If you go to my first slide, essentially the power sector is facing a liquidity, a financial crisis, which is manifesting in liquidity issues. And of course, because you have liquidity issues, you have all manner of issues arising from there. Local and international investors are not all shying away from the industry. Even to borrow money is becoming very difficult for the power sector from development finance institutions. And because you can't get money into the sector, you then have all manner of secondary issues. Your distribution network is still poor. Your transmission network is still suffering. Only last week or 2 weeks ago, the generation companies came out to inform everybody that they were being owed 4 trillion naira, and that if they were not paid, they would switch off their generators. So essentially, it's all arising from liquidity issues in the markets. And that's the critical issue. So that's the issue NESG is looking at trying to solve this year, believing that if we can dent the liquidity issues, then hopefully other issues should begin to fall into line. So if you go to the next, so what we will be doing essentially, which has already taken off, we are looking at, let me just add that the federal government, we've tried to print our way out of this problem. It didn't work in the last administration. We've also tried to borrow our way out of the problem. It hasn't worked in the last 2 to 4 years. So at the moment, the solution we are looking at, which everybody is getting on board on, is to trying to approach the sector with smart money. And that money will be held via a Power Finance Corporation of Nigeria. So the thinking is still a thinking and is being fleshed out, is that an institution will arise or will be set up in the industry that will try to break the vicious circle with some smart local and international financing. And then that will act as a catalyst to begin to reattract investments and funding into the sector, international and local. Then thereafter, you can now begin to drive the infrastructure growth back in the industry. So that is what this geograph is trying to, this slide is trying to show in a nutshell. So if you go to the next one, so essentially what we hope to do, the first work I put there inherited from the Energy Policy Commission, which talks to what Rahila mentioned before, is we are going to look at energy affordability study. I will look at that in the next geograph. But essentially, the main work, which we have started already this year, is a private sector-led Power Finance Corporation of Nigeria. And the Office of the Vice President and the World Bank have agreed to do this work. So the setting up a Power Finance Corporation, essentially, what they said they want to do first is to prepare a concept selection, a concept report, and a feasibility report on this Power Finance Corporation. Then based on the feasibility and concept report, we can then get into the implementation. Then for the second part, which is essentially an energy affordability study and roadmap, which came from the Energy Policy Commission, which had been talked about by the previous presenters. What we want to now ask ourselves, if you go to the next, slide, essentially Nigeria has all these sources of energy. We export energy, we also import energy. Coincidentally, we have subsidies, and we have Nigerians who are not satisfied with the way we are implementing the entire energy value chain. So essentially, this study, which will essentially a high-level study, will look at what can Nigerians afford, how do you optimally deploy your energy, how do you optimally position your subsidies if there's any need for subsidies, how do you optimally utilize the energy in country to make sure that you get the best out of it in terms of costs and affordability and usability for your citizens. But again, this study, which is energy affordability study, is still at an inception stage. We are still trying to work out the terms of reference. So essentially, in a nutshell, this is what the Power Thematic Group will be doing this year, mainly the Power Finance Corporation, which has commenced already. And I know that 2-3 months ago, the NESG sent a letter to the Office of the Vice President requesting to be a part of that study. I'm not sure. I helped the NESG draft the letter. I'm not sure if the letter has been sent or what the Office of the Vice President has said. But essentially, that is where the Power Thematic Group is at the moment with this year's work. I don't know if there are no questions, then I will have to rush up for another engagement.
So we'll take questions after the entire thematic have presented. So thank God we have Madam Raila on the call, so she'll be there to respond to questions, sir.
Okay, thank you.
Yeah, thank you so much for your presentation. We are grateful. I'll call on Mr. Kelvin to present that of the oil and gas. Thank you so much, sir.
Hey, good afternoon, everyone. I am privileged to be here. I also want to thank NESG for the opportunity. Thank every member of Industrial PC and thematic leads that work together to make sure that the needle is pushed and we can translate from complaining to actually engaging and making effort. I also want to thank everybody who took the time of their busy schedule today to join in the session. So, you know, it's interesting because the recent scare to the oil and gas sector was like, you know, prices dropping and then the Ministry of Finance getting into panic mode. And Nigeria has one of the highest unit production cost per barrel in the world. And between the FIRS and the government, NUPRC, I think they have anywhere between 36 to about $48 US per barrel. That's very high. And there are several factors that constitute you having very high unit cost of production. So if you look at producing regions and countries, you know, you look at the Middle East, you look at North Africa, you look at, there's been a slowdown, serious slowdown in production in Europe because of the call for carbon control and switch to renewable energy. But if you look at the US, shale oil, though shale is a little more expensive to produce than regular grade crude oil. But Nigeria has very high unit production cost per barrel. So the reason is, you know, why is it that despite the fact that Nigeria has 38 billion barrels of proven reserves that has a 60-year lifespan, so your proven reserves about 38 billion barrels, and you have your possible and probable reserves, your 2P and your 3P reserves, the government has just not been able to translate to actually increasing Nigeria's output. Some people will argue that, oh, it's actually because, you know, Nigeria is part of OPEC. There's a quota. Nigeria is the 12th largest producing country in the world. There's a quota that places a cap. You have to lobby the other OPEC members. But some others will say that even if OPEC has kept Nigeria's quota at anywhere around 1.5 to 1.8 million barrels over the last 2 years, Nigeria has not been able to consistently stay at that quota or exceed that quota. I think right now it's hovering anywhere between 1.4 and 1.45 million barrels of crude. So when you look at, if you take a brief overview of the oil and gas sector, for example, the structure, you see you have NNPC controls, I'll say anywhere between 51.3 and anywhere around 57% of the government's assets of the sector upstream. You have joint venture, you have sole risk through financial technical service agreement, you have production sharing contracts. So if you look at the cumulative average, what's actually entitled to NNPC that owns the share of the government upstream, there is anywhere around 51.4 to 57%. But then when you look at the native reports, you see that there's a discrepancy between what is cumulatively due to the federal government through NNPC and what they actually do in crude oil lifting for profit oil, for tax oil that goes to FIRS, for royalty oil that goes to NUPRIC, that is based on depth, price, and volume, But the question is, why is there been a consistent drop in the production volumes? Over the last 10 years, production has dropped from 2.4 million barrels to around 1.4, 1.45, which is where it is currently. And if you look at that cumulative average, NNPC and then NUPRC and then FIRS, they get anywhere around 700 to 720,000 barrels on a daily basis. That's what they get. And 445,000 barrels is designated as what they call the domestic crude intervention stock, which is basically a stock that was supposed to provide crude oil to the 4 government-owned refineries that actually has installed capacity of more than 400,000 barrels per day, but are all not functioning. Okay, and then the difference is supposed to go to royalty oil and tax oil, and then the export markets. Okay, but now, number one, upstream, you have a problem of the fact that the international oil companies over a long time have had communal issues. They have issues around decommissioning, abandonment, remediation. They have so many capped wells, either wells that have aged and the cost of drilling is higher than the profits they get, or wells that are capped because they just found those places too hostile to operate. So over the last 2 to 3 years, you've seen a flood of exits. Total sold to Chapal, Eni, the Italian company, sold to Wando, Mobil sold to Seplat, and SPDC sold to Renaissance Group. And the welcome Renaissance got 2 days after they finished the acquisition. The legal process was the situation you had in River State where pipelines were blown. I'm not going to get into the politics of it, but the communal issues, the community issues, the remediation, the commission abandonment, and the fact that historically, and before the PIA was signed in 2021, there really wasn't any decommissioning and abandonment fund that was provided for the joint venture partners to contribute to do things like remediation, which is now a major sticking point, because when the pre and post investment and divestment liabilities were calculated during the exit of these IOCs, I think Renaissance and Shell came to about $18 billion. And then Mobil and Seplat came to about $11.8 billion. The question is, retrogressively, if you're applying it, you can't. So you can only apply those costs, remediation and decommissioning fund that is now available post-PIA from 2021 August when it was signed. So the question is, who cover for the liability of pre-PIA to ensure that you can go into those communities, do decommission, do abandonment, do remediation, which is popularly what they call the environmental cleanup, which hydrocarbon remediation program is supposed to cover, to enable the community provide a safe passage for the operators, which are now members of the independent producing IPPG, to come back in, and that's a major issue. So for the assets that 583 wells, for example, that Renaissance got from Shell, I estimate that they can do at peak anywhere around 350 and 400,000 barrels per day. But given that you have the issue you have in Rivers State, which is where quite a number of those assets are, and there's not been HREP, decommission, abandonment, remediation, cleanup. How do you get the communities to agree? In fact, even the Hydrocarbon Development Trust, HCDT, that is set up in the PIA, the regulator, UPRC, has not been very forceful to implement to ensure that operators actually endow the funds, set up the legal framework for it, endow the funds, and see that those funds are deployed into ameliorating the issues that come from actually operating those assets. So that's a stumbling block to getting the new operator of SPDC's assets from going back in. So for example, the IOCs have gone deep water. IPPG members, which are mostly the NOG national oil companies, are onshore, mostly onshore, because quite a number of them don't have the experience or capital to be able to operate in deep water. SNEPCO, for example, last year commissioned Bonga North. Bonga is part of a family of Bonga Main. You have Bonga Main, you have Bonga North, you have Bonga Northwest, and you have Bonga Southwest. So Bonga North, for example, we're expecting first oil in 2029, and expecting that well has an estimated oil, like 8 wells, 8 wells for oil, 8 wells for water injection, because the structure of Bonga North is actually not going to be where each well will have like a riser with an FPSO. They have this new technology in deep water where an IOC can basically drill a well, cap it, do field development on it, and then, aggregate all the surrounding wells to a riser and then take it to one FPSO. That's the structure. So at full capacity, they're expecting to do anywhere around 110 to 120,000 barrels per day, but that's not going to happen until sometime around 2029, 2030. That's when they're going to hit first oil, and it's going to take them another maybe 24 months to actually hit full capacity. So expecting recovery, ultimate recovery of about 300 million barrels over a period of 10 years, from 2030 to 2040. Mobil is supposed to commission an FID with Exxon, that's their deep water arm. ESSO is supposed to commission FID along with CNOOC and Total somewhere in Bielsa, but they've not come to it. I'm expecting that this year they're going to come to it. So, you have joint ventures, then you have production sharing contracts. A lot of those assets in deep water actually production sharing contracts. A lot of the joint venture partnerships you've had, where you have a situation, NNPC is not able to contribute the finance required upfront to do it because you operate what they call an unregistered joint venture model. The operators carry NNPC as being a hindrance to investments upstream. So the structure they operate, based on Section 65 of the PIA is such that if, for example, it's going to cost $2 billion to do field development onshore on, say, just for example, OML 21 or OML 19, NNPC, for example, probably owns maybe 40% of the assets. They are supposed to contribute 40% upfront as capital contribution. But the structure they've had, the commercial model they've had, when you look at the petroleum fiscal regime, is such that NNPC usually is not able to put up money, and they end up being carried, and then they end up doing amortization and payments for their loans over a period of time. That's been a hindrance to actually increasing the output for crude oil, because you've had a situation where over the past few years, in fact, in Buhari's first term, $5.2 billion in joint venture cash calls were owed to the operators. And it took quite a number of years before those monies were paid. And what I've heard industry, captains of industry in the oil and gas sector and players in the sector suggest is, why don't you move that unregistered joint venture model to actually an incorporated joint venture company model, which is the model that NLNG operates on. So for example, NNPC is holding the federal government of Nigeria's 49% equity in NLNG. And by that, it means that, for example, for Train 7 that was started in 2019, NNPC had to put up 49% of the capital cost required to develop Train 7, which will add 8 million metric tons per annum of installed capacity to be able to, when you get gas comes to gas field, from gas field it goes to the flow stations. From flow stations it goes to designated nodes, which is where you do calibration for pressure and you do analytical and all the testing. And then from there it goes to your central processing facility for separation. Then it goes to either the domestic markets or the export markets. The export markets is where you have the NLNG. They get the gas, they separate it to propane, to butane. The grade of Nigerian crude we have, which is light grade, actually produces more propane than butane because of the density. Most of the gas, 80% of the gas, Nigerian gas you have, which is lean gas after it is treated and separated, actually gives you about 80% methane, which is what they liquefy into LNG. And if you consider the fact that Nigeria has 53% of 210 trillion standard cubic feet of gas as non-associated gas, to about 47% of gas that is associated. So the difference is that, associated gas, when you drill crude, you trap the gas. That's associated gas because it's crude you recover when you drill oil. But then the gas you get from drilling actual gas wells and not focusing on AG, is the one that Nigeria has not explored. And that's because the petroleum fiscal regime that you have in Nigeria has not provided the right environment for investors to be able to put their money and explore just for gas and not put into crude oil or associated gas. So the global LNG market is booming, because LNG is a transition fuel. And there's been a spike since the Russia-Ukraine war and since there was an embargo on Nord Stream 1 and Nord Stream 2 pipeline. Nord Stream 1 takes gas from Russia through Ukraine, the Yamal pipeline to Poland, then to Germany. Nord Stream 2 was built through the ocean, and there was sabotage of Nord Stream 2. They spent $10 billion for that. Nord Stream 1, there was an embargo on Russian oil and gas. A lot of that demand, because of the embargo, because Russia was taken out of SWIFT, Russian companies like Gazprom, Lukoil, and the likes of them, their banks could not open LC for them to export oil or gas. A lot of that demand went to LNG. But Nigeria was not able to capitalize on it, being the 6th or 7th largest producer of LNG in the world. You have installed capacity of around 22 million metric tons of LNG for NLNG, but they are currently, I'll tell you, they're doing anywhere around 55 to 59% of capacity utilization. Nigeria was not able to capitalize on it because there was, the decrease in the output of crude and the gas it recovers because associated was not able to, they were not able to get the feedstock required to give NLNG to capitalize on the surge in demand of LNG all over the world. Even the recent tariffs that Trump placed in China, 245%, has placed a barrier in terms of US LNG that goes to China. And that created an opening for countries in the Middle East, Qatar, the UAE, in Africa, Nigeria, Algeria, to be able to capitalize on that. But Nigeria is not able to capitalize on it. As a matter of fact, you see, even for existing contracts that NLNG has signed, offtake agreements NLNG has signed, for example, this is a very popular example, Televirus. They pre-sold 19 cargoes to Televirus in 2020 during COVID, and they were not able to deliver to Televirus. Televirus has sold those cargoes. No, they sold to Televirus. Televirus pre-sold to Glencore and Vitol. NLNG was unable to deliver to Televirus. Televirus was sued by Glencore and Vitol. And the long and short is that after the case was won by Televirus, NLNG appealed. They lost the appeal last year. The arbitration was unsealed, and NLNG has to pay $380 million if they don't have insurance for such force majeure, exceptions. So what are our issues? Number one, there is a governance problem at NNPC, and the governance problem is that traditionally, NNPC based on the PIA is supposed to be owned as beneficial owners by Ministry of Petroleum Incorporated, Ministry of Finance Incorporated, which is the vehicle that the federal government set up after PIA was signed to be able to manage government-owned enterprises, particularly in the oil and gas sector. NNPC is not supposed to report to the State House. NNPC is supposed to report to their beneficial owners. Okay, so there is a governance issue where, NNPC
Hello,
reports.
sir.
Can you hear me?
You have 1 more minute to finalize your presentation.
Please, can you just give me just a few minutes? I'm rounding off. NNPC has a governance problem. Okay, the system of reporting, the fact that there is a lack of an hydrocarbon accounting framework at the Ministry of Finance to independently verify the production volumes, the fact that there's a lack of fiscalization. If you look at Section 69 of the PIA, it talked about fiscalization of the oil and gas sector upstream. Today, as we speak, there's no integrity in the amount of crude oil that comes to surface because the meters at flow stations are wrongly calibrated, because there are no meters at the wellheads. The Ministry of Finance cannot independently tell you how much crude oil comes to surface and how much gas is recovered because it doesn't have a system, independent system for verifying that process. That is a major issue. And until you can address the issue of governance, where the new board of NNPC, for example, can rejig the corporate governance model of NNPC to ensure that you don't have people, throwing out orders over their heads, and they can strictly work on their corporate governance structure and start the process for like unbundling, which will involve first a forensic audit. You have to do evaluation and classification of the existing asset, their reservoirs, check the existing wells they have, check how much they have. You have to look at their contingent assets and liabilities. And then you have to go to the valuation side of it, give it to the book builders. They use both net asset value and discounted cash flow. Net asset value will be used for their existing reservoirs, and discounted cash flow will be used for their reserves, their proven reserves, probable reserves, possible reserves, for them to get a net and properly price the stock and send it to the markets. And until the markets can have confidence in the management and board of NNPC to say, we have confidence in you, and we'll be able to provide project financing required to embark on capital projects like maybe the export pipeline, Nigerian Morocco gas pipeline, to increase the export of gas under the willing producers price parts, to be able to invest in doing exploration and production, to change the structure NNPC has, where today, despite the fact that it has 5,000 staffs, NNPC cannot drill crude oil and recover gas by itself. It gives out to third-party contractors through service contracts to do that for it. To develop the technical capacity to be able to operate the assets that they own 100%. You're not going to see change in the output for crude oil and gas. So finally, as I close, you see, in my engagements with stakeholders in the oil and gas sector, the issues I always hear is that the operators do not trust the state-owned enterprise. Okay, if for example NNPC co-owns, deep water, NNPC owns 60%, they own 40%, and they want to invest, and NNPC cannot put up their own money up front, and NNPC is saying that they should do, carry and collect to cover their capital over a period of time, then there's a problem. And the only way you can address that, outside of raising money through the equity capital market, is to do project financing. The only way you can get investment banks to be able to provide equity financing for NNPC to invest, co-invest, or directly invest in assets it owns 100% to increase the output for crude oil and gas, is if the markets trust them. Right now, the verdict is that the markets do not trust them because they operate an opaque and shallow model that is not transparent and does not work based on corporate governance standards and rules that are globally accepted. But it's my hope that with the president changing the management and board, which was a major and very tough decision, that this new team will focus on first governance. I hear that they're changing their governance model, will make changes to the human resources at NNPC. Change middle management, change senior management. It's my hope that they will start the process of unbundling NNPC and deal with the model they have around the operation of assets that they own 100%, and start the process of getting NNPC to the markets to change the commercial model and structure required for raising both equity and debt capital financing to finance projects upstream. It's also my hope, and I've not talked about this, but midstream, that they will see the light, that those assets they own for the refineries are not operational, they are dead, they're not going to come back, they are aged. Currently, I'm aware phase 5 in Eleme is doing 18% yield compared to Dangote that is doing about 57% yield, and it's operating at under 40% capacity. Worries not been functioning since January. When you take money you earn from lifting crude oil upstream and then you subsidize midstream operations, then you have a problem because you have a loss-making business that the country is only keeping for national pride. Because I've always been an advocate of the fact that Nigerian government over time, when Nigeria compares itself to China, it makes me wonder because they've proven over time, not just with oil and gas, with steel, the Ajaokuta power plant, steel plants, and several other government-owned assets. The Nigerian government does not have any business doing business. Its role is to provide a structure, a framework, and provide a legislation for the regulation of different sectors in the economy and allow business to do what they know how to do best, create value and pay taxes. Thank you very much.
Thank you so much for the overview of work, oil and gas sector. So we'll call on Mr. David Arinze for the Renewable Energy Thematic Group activity, work plan, action plan for the year. Thank you so much. Mr. David, over to you.
Kindly confirm you can hear me.
Yes, can hear you.
All right. Warm greetings, everyone. It's a pleasure to be here, and it's a delight to quickly make this presentation from the Renewable Energy Thematic Group. Thanks to the previous speakers from oil and gas, power, and also the co-lead of the of the Industry Policy Commission, Ms. Rahila. And indeed, having this sort of meetings or sort of stakeholder engagement, General Assembly, kind of just tends to remind us of what we're here for, which is to see how we can contribute our quota towards strengthening the sector and which should lead to improved life and livelihood for everyone, because energy in itself is a prime mover. And if you're following the news, you'll see that there's a lot of things happening within the renewable energy sector, which I wouldn't bore you with, but rather go to the meat of today's presentation, which we hope to share a bit of light on the challenges that exist, some possible solutions on what our recommendations look like, and also a couple activities to look out for. I can't wait to get to the Q&A session because this is supposed to be contributed to by such an engagement, such an engaging session. So please do not see this as the final bus stop. This is a work in progress. We actually want to hear from you. We want you to contribute towards what we have put together, and ensure that all of this feedback will be taken to better inform our action plan and our strategy, and even the next activities that the thematic group will be working on in the next couple weeks, months, and also thinking long-term years. But very quickly, we have here some of the issues that we have identified within the sector, such as policy fragmentation, institutional inefficiency, socioeconomic resistance, financial constraint, import dependence and supply chain gaps, capacity building and skills shortage, insecurity and social instability and lack of data and transparency. And you'll be asking yourself, some of this may be buzzwords, some of this may be issues that we tend to recognize even in our spheres, and we may have even had to experience this if when we're as a result of because of our work, right? And you see that sometimes there's a question around, oh, what exactly is the direction that the country is going? Is it the energy transition plan that is informing the actions we're taking? Is it the integrated planning, integrated resource planning, that is it? Or is it the NIEP, the recent NIEP, energy policy, integrated energy policy? But again, I would like to say here that when we see sort of policy directions or documents like this, we should look at it as an improvement on the former. So if you look at the different sorts of either the Electricity Act of 2023 or different sort of work, the Renewable Energy Master Plan, all of these sort of documents tend to refer in one way or the other of previous work done. And all of this is supposed to help strengthen the work that we have in this sector, provide some sense of direction, and also some level of comfort to enable us unlock the kind of financing we need to scale, to drive the sector and also scale the sector. Also, very importantly, this does not work in completely independent of itself. Of course, this has a lot of nexus with other, call it thematic groups, and also policy commissions. Also, this has some nexus with other sectors completely. So, for example, when we begin to think about localizing or localization within the renewable energy sector, especially when it comes to equipment manufacturing, we cannot think about this and talk holistically about this without the mining sector. When you think about what we have with, if you consider the ETP, the Energy Transition Plan, that has identified gas as a transition fuel, and also see the work that is happening with the likes of the presidential CNG initiative, that is really putting a lot of work on transportation. You cannot do that really without talking about the gas sector. A lot of people argue that we're more of a gas nation than an oil nation. I'm sure Mr. Kelvin, a former presenter, should be able to put some more light, but based on the data, I'm sure that most of those claims are evidence-based. And so these are some of the key issues, and we hope that we will not just dwell on these issues, but see how well we can, as the NESG, contribute our quota towards addressing them. And so some of the major challenges that allow me to just spotlight a few. One of the challenges that we have today is data. Now, we have a lot of initiatives going on within the renewable energy landscape, led by incredible work led by the likes of the IREA, another, like I mentioned earlier, the PCNGI and the rest of them. And you ask yourself, are we able to really measure on a year-on-year basis how our progress, in terms of electricity access, access to driving energy transition, especially in areas of the 5 key areas that have been identified by the ETP. Also, what are we doing around clean cooking, and what does the data say? On one hand, what you may have from, you may consult the International Energy Agency, what you have on there may not, in terms of data, may be some realities that may not be as updated as they ought to be. You get to, for example, the National Alliance on Clean Cooking, or Nigerian Alliance on Clean Cooking, and they would give you a different perspective to what that sort of data looks like. But one thing is critical. Energy transition is not a nice to have, and energy transition is something that we must do, to ensure that we can guarantee future generations of living very sustainably. And so also, when you look at the funding landscape in sub-Saharan Africa and also down to Nigeria, global spending in renewable energy is in sub-Saharan Africa collectively is less than 4%. You know, and you ask yourself, is this money not available? The question, the answer is resources are available, but are we able to ensure that we create an enabling environment that can help position the sector to unlock significant private capital? Because of course, we see that there are a lot of pledges here for philanthropic capital, but we need to be able to ensure that we can unlock investments within this sector that can enable the sector scale. And you see that when you look at the countries, the top 2 countries who make up over 70% of global spending in renewables, you see that US and China top that chart. These are countries that have understood that while this may be a challenge, we can create an industry around this the solution, which can also invariably create jobs, improve lives and livelihoods, guarantee energy security, you know, and also strengthen a manufacturing market and also prepare it for export. Also, when it comes to building capacity and skills, significantly, you see that even down to our curriculum, even in the universities today, how many universities do we have prioritizing the subject of renewable energy, able to build competency of undergraduates? Some of the universities that even have some sort of programs are doing this at the postgraduate, either the master's or the PhD level. So this is also one significant issue. A few other issues around import dependence. So like I earlier mentioned around local manufacturing, there is the need to really sit on this challenge, you know, to an area of strength, not just for Nigeria, but also a sector that can also create solutions that is export worthy, you know. And when we think about the critical energy minerals today, we have a large deposit of some of these minerals that we can turn from raw materials into finished products rather than having to export them as raw materials and import them at 4x or 5x the cost, you know, but we can really get the value that they present for us, and that we can take advantage of as a nation. Please, let's go on to the next slide. As we try to talk about some of the recommendations. So policy coordination to address the issues of policy fragmentation, and the national government should establish a central body to coordinate renewable energy initiatives. Some argue that we have this already existing, some argue that we don't, because right now you see that you may have initiatives between REA, NERC, that are strengthening the renewable energy sector, and you see that the likes of Energy Policy Commission and Energy Commission of Nigeria, ECN, you know, and the Ministry of Science and Technology may even have other initiatives which also intersect within the renewable energy sector. And there's that need to really bring everyone under one voice. Strengthening institutional capacity, adequate funding and training, and capacity building for institutions involved in the renewable energy sector are essential. The next recommendation here we have is public awareness and education. No doubt we have received a lot of commitments from the likes of the Ministry of Power, who and other government agencies who are already carrying out, who have created, put a bit of focus, you know, on engagement with its citizens, and also for some dialogue, for consumer dialogues that could enable us get issues that are happening on the ground and also create a pathway to address them. On the next slide, we would also have 3 other recommendations which have to do with Next slide, please. Financial incentives that supports investors. This sector in itself can unlock billions of dollars, but we must be able to set up a right example. If time will not permit me, I would have given a classic case that happened in two African countries, where one was able to unlock multi-million dollars in follow-on investment, over several hundreds of jobs in that other country. And also that particular clean cocaine solution was able to drop to as low as $18, per unit. While in the other country, where a similar business model was being executed, but because they were being taxed, and of course they had a tax holiday in the prior country, in the other one, they had to deal with things like tax on import duties on the stoves, because the stoves were not being locally manufactured, importation of the fuels as well, duties on the fuel, and all of this made the landing cost as high as $80, per unit. And you begin to ask yourself, on one hand, we need people to transition. On the other hand, we need to be cost friendly, for people to adopt this solution. So also leveraging international partnerships. We're already doing this, but we just need to strengthen this more, because what we have unlocked is not up to, we're literally scratching the surface compared to what can be achieved. And data collection and research, and allow me to say, not just data collection and research, but in addition to this, also effective monitoring and evaluation, to enable us effectively track the progress of the sector. What are we doing when it comes to clean cooking? How are we scaling things, and how we're ensuring that we're bridging the gaps that exist there when it comes to electrification? What are we doing? And of course, just to also mention here that renewable energy in itself creates an opportunity to work both as a standalone, but also a nexus with the grid. So considering grid-tied applications, grid strengthening, also through renewable energy solutions as well. Those are also part of the recommendations that we're looking at. And on the very next slide, please, as I try to wrap up. On the next slide here, we have a few things that we've listed that we'll be looking at. Policy reform and institutional alignment. One of the things that really comes up here as well is who is leading on clean cooking in the country, and how can we ensure that there are clear-cut KPIs, and there's a direction for us to achieve clean cooking in Nigeria. What does even clean cooking mean to us as a country? And how do we intend to bridge this gap meaningfully? Do we want to adopt a one-size-fits-all, or do we want to look at different solutions that fit different demographics and different contexts, also as it aligns with the cost? Institutional capacity building, launch a nationwide program to enhance technical skills of government. These we believe that a lot more handshake needs to happen with the likes of Koren, NEMSA, and even NAPTIN as well, and quite a number of other players, even the likes of from the Ministry of Power and also REA. We really need to ensure that people personnel are skilled and reskilled, in order to drive the sector. Increase funding allocation to agencies to ensure that they can improve their operational capacity, as well as public engagement and educational outreach. We would take all of this step by step. We may not be able to execute all of this just at once, but we also want to be able to hear from you on what you think about our thoughts, how we're thinking about this, what you think the low-hanging fruits are. We have some ideas, we have some thoughts around this, and we are literally open to really hear your thoughts as well on what you think and how best you think we can scale the solutions. On the next slide, as I try to wrap up, we would also be looking at investment facilitation and reporting, as well as also grid modernization and renewable energy integration, just like I earlier mentioned, because the role of renewable energy, like I mentioned, can also help bridge last mile community electrification in last mile communities that the grid may not make economic sense to extend the grid to. But however, we can also complement grid supply with renewable energy solutions that can also ensure that Nigerians enjoy, quality and consistent electricity supply. Then also, when it comes to research and data management, we have here set up national renewable energy research institutes. We already have some of these in the country at the moment, and so we're thinking that we will not just think about. We're very open to the idea of setting up relevant research institutes, but also strengthening the ones that currently exist in Sokoto, in Enugu, in the FCT. We have some of these institutes that already existed, that are already existing, and some of them also would are being considered, are currently on the pipeline. But how do we equip them? How do we strengthen them? And how do we ensure that they are fit for purpose so that they can really perform the role that they can perform, that they're meant to perform in strengthening the renewable energy sector? And so this is an open discussion, not just to shove a lot of things down our throat, but just give you an idea to how we're thinking about this subject and how we're thinking about some of the solutions we're thinking, and also hear from the floor on your thoughts and how best we can drive the renewable energy sector and also its nexus with other complementing subsectors and also industries. Thank you for listening. Jackson, back to you.
Thank you so much for the thematic presentation. We go next to question and answers. Do you have questions, comments? Well, now is the time. I think I will start by picking out those that have raised up their hands to ask question. And also when you ask question, please direct it to, if it's for the power sector, direct it to Madam Raila. If it's for renewable energy, David. And if it's for oil and gas, Mr. Calvin will graciously waiting to respond. And also, if it's for the NESG, we have my colleagues on the call that can respond to this, to the questions you've raised. Thank you. So I'll call on Ofti. So just unmute and ask your question.
Okay, my name is Ofti. Can everyone hear me?
Yes, we can hear you.
I joined pretty late, so I was only able to listen to I joined really late to David Arinze's talk on renewable energy. And I have, well, it was a really beautiful slide and really beautiful presentation, but like trying to implement that in Nigeria, because I feel like we need like education, like the mass, they need to be educated on the benefits of renewable energy. And like, I'm just thinking about the mass, and I'm thinking about like people that can't even afford, they go for the cheaper version of like clean cooking, for example. Obviously, they'll go for the cheaper version of ways they can probably prepare their food, and maybe the cheaper version is by using charcoal, by using wood, by using things like that. So when you're trying to now implement or execute renewable energy and impute that into cooking, and you're talking about, oh, let's use solar gas or electricity. And I think that was like several months ago. We're dealing with issues of the national grid failing rather. We're dealing with issues of tariffs, higher tariffs when it comes to electricity. And then we're trying to implement all these things. And like, can the mass afford that? Can they afford the high tariffs that come with using electricity to cook? For example, in my house, I'm scared to use my electric cooker, and I'm scared to use my oven, and I'm scared to use my air fryer because of the bills I would end up paying when it comes to clean cooking. So I'd rather just use my gas, if you get what I'm saying. So I feel this implementation, it won't obviously, it's not, Rome wasn't built in a day, so obviously it won't just start now. But I feel like we need to start with like education, like the mass needs to be educated on the benefits, or we just need to find a way to make it easily accessible to people. Because I don't know. Yeah, so that's just.
Okay, thank you so much. Mr. Oluwafemi Adeleke, you're next.
Thank you very much. Can you hear me?
Yes, sir.
Okay, so I think I want to first thank all the presenters. I'll probably address my question, or like to address my question to David for the renewable energy discourse. I see one of the issues I think we should look at addressing, or some of the issues is one, the cost of the proposed tariff that the government is looking at for renewable energy in terms of solar panels. Because yes, there was this tax waiver, but gradually government now say, oh, might be something. And we know local production is still below par. And so even companies, if you say they should diversify and probably start producing, like we have like Oxano and some other players in the space. But again, how do we address that? Also, there's also the issue, many places, there's also the issue of the Chinese coming into the Nigerian space to offer products. And what we are seeing is they are now competing with the companies in the renewable energy space. And let's not forget, now they have to play with the margin. So if I am the OEM from China and I now have my factory and I'm now selling in the same market, so what protection is the government going to give to local players and Nigerian companies? Because when the producers are now in the same field playing with our own companies, how do we address it? Because I think that's the way, I think is one of the ways to probably ensure that companies that are entering the renewable space can survive. Because if you have the producers coming here to compete with them, it's in no time they will cannibalize them, and it's going to be maybe people from outside controlling that space, and eventually the growth will be stunted. So that's some of the areas I think we should address. Yes, thank you very much.
Thank you so much. David, respond to the questions.
Thank you so much for your questions. Very well said. We need finance to drive the sector, and when you talk about the cost, I know that's why, if you recall in my presentation, I asked myself, okay, just let me take you from the clean cooking question before I come to you, Mr. Wilford. For the clean cooking question, you see that if you look at the subject of clean cooking, we have hot plates, for example, electric cook stoves as an option for clean cooking. We have clean cook stoves that use briquettes as another option. We have clean cook stoves that use gel as another option. We also have gas as well. So there are different solutions, and that's why when we think of meeting our energy, our clean cooking needs, we need to be able to look at it more high level on what solutions we would need to consider. Just like how, for example, in order to, in some urban settlements, you see that people don't have to have their individual boreholes because there is a piping system that is able to feed people that live within those areas. And the board, for example, continues to expand those lines. And people within those areas, most often than not, may not necessarily have to set up borehole solutions. And when you have borehole solutions, just very few. We also need to be able to identify what does Nigeria identify as clean cooking and begin to segment it based on carbon content, also based on the goals, and also based on the specific roadmap that is able to ensure that, okay, within these areas, we're able to use gas, and in areas where we're not able to use gas, I'll complement gas with the grid, to meet our clean cooking needs or e-cooking. We're going to use, briquettes, that are made from sawdust or any of some of these biodegradable and degradable waste. So we need to be able to get to that, and of course, at different solutions will come at different price points, but we're able to achieve that once we're able to clearly, map that out. I understand your concerns because, again, some people feel like they don't want to use electric stoves because of the stories they hear, and also that means that in addition to some of these solutions, we need to think about the safety features and a couple other areas, that make it very safe and effective for people to use. I personally know of someone who suffered an explosion in their house as a result of during the use of a kerosene lantern, a kerosene stove, I beg your pardon. So in those sort of situations, we have people who have used the solution, and for years they may not have had any challenges. But again, thinking about the safety features of this solution, although it's a different ballgame. But again, we need to be able to clearly identify how can we ensure Nigerians can meet their heating needs, their cooking needs in an equitable and inclusive manner, where cost is not a problem. But again, we have a very clear framework on how we're going to drive it. And we will support that work. And you're also welcome to support that work. Mr. Luafemi as well, when it comes to the challenge around local participation of our industry. The truth is we need money. We need money. But what is most important, and allow me to cite that example that I earlier mentioned. And so this particular country, in their own experience, it was Rwanda, a company that was not owned by an indigenous any citizen of Rwanda, just came, hey, want to set up a business here, and the country was willing to say, hey, you're coming in, you must be able to give them a couple conditions. Some of them are listed very briefly. So you must be able within this within the next 5 to 10 years unlock a minimum of $25 to $30 million in direct foreign investment, be able to guarantee 500 jobs, direct jobs for our citizens. Also, because of the model that they had with their business, people need to refill their stove, the fuel once the fuel is out in the stoves, and that also gave them an opportunity to get this company to commit to an additional 5,000 jobs. And this is just one company, and they, of course, on the side of the government, they were giving a 10-year tax holiday, giving an area for them to set up their business, in one of the economic zones. And it was a win-win situation. So even for us as a country, we need to understand that for us to really leverage our local markets, we need to be able to go to these negotiations, with value in mind, because we need this sort of financing to scale things. And for those who want to play within the sector, it's on us as government to be able to create that enabling environment, but also as citizens to also think expansion, think future. So beyond just having to see it as a Nigeria trade war, which is not the case, how do we see the opportunities for collaboration that would improve, that would have the benefits of the typical Nigerian at the heart of these negotiations. And so it would inform the way we approach business. It will inform the way we think about things. And just like how in some countries today, not name calling, but you cannot set up any business there. No foreigner can set up any business there without employing up to 50 or 60% of the workforce, even represented down to the management. So these things are there. And so we must be able to think about it from that perspective and think of how best we can approach this. And also, you mentioned something, I think, in your comment here about unlocking financing, because some people are pulling out. Yes, the truth is energy is a business. So while some people are pulling out, I will tell you that some people are coming in. And so it's important that our local players and entrepreneurs begin to look at it from that perspective, where who are those that are interested in this sector? Who are those working tirelessly that they want to advance the sector? They are. So while a known funder or possibly known programs are closing out, new programs are coming in, and also these opportunities are out there. And with the right level of information and preparedness, should be able to achieve, leverage them for impact. Mr. Jackson, back to you.
Thank you so much for kindly respond. Do we have other persons with questions, comments, and we're here to respond to all questions and comments. Oh, Mr. Adeleke, you're back?
Yeah, thank you very much.
Okay.
Yeah, thank you very much, David, for the answers. So my question, still goes back to Yes, in terms of like not seen as a trade war between China, like I said, it's good we are discussing this. It's also good we provide advisory to government in terms of policy that will ensure that it's also fully implemented. Because maybe because I'm saying this, the reason I'm saying this because my organization also provide advisory for organizations in energy space, like strategy sessions we lead and try to give them guidance on growth. And yes, we know some of them are adopting the sustainability reporting so they can seek FDIs. But the issue, like I said, is what I think we should drive is in terms of implementation. So whatever policy we say we are running, we should be able to ensure that we implement. Because if the companies feel they don't get support in terms of protection from these competitors, because again, like I said, some of them are having like low margins on the sales, and the margin gets some that you're not even having any margin. So from what David advised in terms of implementing this number of workforce that you would help us get, on board, the Nigerians that you employ, having Nigerians on your board. The question is, how many of these companies are implementing this? Because again, the local companies are crying in quotes because there's this, in quotes, abandonment that we need to grow, but we're struggling. Some of them probably got like the ASDF funds, and Trump said, okay, I'm pulling this off, and that is tanking. And so there are a lot of issues, but I just feel like I said, it's in terms of implementation. How do we ensure that all that we have suggested in this policy is implemented? Because if implementation is not there and it's just in the books, it's still going back to the wrong side of the table, because many companies are folding up and the economy is struggling. We know the demand for power is, the need, so the gap is there. But no matter what, even diversification and everything, we need funds. Yes, collaboration makes sense because when everybody comes together, but I think we also need to drive that awareness, because how many local companies are also interested in collaboration? So, but like I said, what I just rather want to talk more, I want us to implement more is ensuring that we can drive that policy, because having policy somersaults, for example, in the tax for the solar policy, the tax holiday for the solar, and government said, oh, we're going to start taxing. So now we don't even have the volume to supply. The volume that is produced locally is used up in no time. So how do we ensure that government stay true? Because again, even if you're bringing investors to come and maybe have a production unit or whatever, and whatever tax you're giving them, whatever you're giving them, you're not staying true to it. At the end of the day, do you think this would attract more people to come, or would it chase people away? So I think we should look at how do we ensure that local companies that are thriving, yes, we know this is what should be done, ensuring that government is really implementing it so that these companies can survive and grow and eventually become global companies, and also ensuring that also people that are bringing money in will also protect their investments so that they can be happy, and we can also give room for more FDIs. Thank you very much.
Thank you so much. Is there anyone with question and comments? If there's none, I think I will call on our facilitator for the energy section of the industrial PC to give our closing comments. However, if you've not joined the PC, the link is on the comments. So click join the PC. I know someone asked about the presentation, the slides will be shared, and we employ everyone to join the PC. We'll be communicating with you the coming days on how things are shaping, your comments on what was shared today, and your inputs on the comment that was shared today. I'll look forward to that. Thank you so much. I call on Madam Raila to give a closing remarks.
Yeah, hi. Sorry, I was dropped. My internet dropped me. Thank you very much, Jackson, and thanks to everyone that has come to, has taken out time to join us on this General Assembly. I think that we have certainly had an insightful time, given all the presentations that were delivered, the questions asked, the contributions. It's been a good time. As we say, if industrialization can be seen to be the cart that keeps an economy moving, the energy sector is the wheel upon which the cart rests. However, this wheel obviously has chips, cracks, gaps that hinder or slow the attainment of industrialization for economic growth. Much has been said about the weak governance, high cost of crude oil production, and lack of supply of crude feedstock to domestic refiners under the DCSO in the oil and gas sector, amongst others. The electricity sector has been subpar due to the liquidity crisis that has hampered financing and funds to flow into the sector to reduce losses and boost generation and strengthen the transmission grid. And to renewable energy, it suffers, I mean, from all that David has said, it suffers from financial limitations, fragmented policy, opaqueness of data to make informed decisions, and the shortage in skill sets, which in combination with so many other challenges that we heard about, challenges the growth of renewable energy. Now, in terms of the contributions, the suggestions and recommendations and proposals that have been made, we can say that they all fall into different segments. Financial, there's commercial, there's governance, there's data collection, there's capacity building and collaborations to drive industrialization for economic growth. So this session today will certainly help NESG to develop a clear and streamlined roadmap with actionable steps, stakeholder responsibilities, and a monitoring framework to drive the needed reform in the energy sector. Let me use this opportunity to solicit for volunteers from our participants to join us in this laudable journey in shaping policy, providing reform imperatives, and working with the different stakeholders and institutions in government to see that we can bring about a transformation in our country in a way that we can industrialize. So anyone that is interested, please reach out to us. We'll be happy to have more people join us on this journey. Thank you very much. Thanks again, and thank you, and thank you. All right then, over to you, Jackson. Thanks.
Thank you so much, everyone, for joining today's session, focus on the energy, and we look forward to sharing the outcome of today's meeting. And also for those asking how can volunteers support to get the work done, yes, register using the link that was shared on via the chats. Once you register, you go through training, and after the training, you'll be able to contribute, to get in touch with you, share documents, you attend meetings, you attend sessions with us. We will always have monthly meetings that will actually shape in everyone, put everyone to shape, bring us up to speed into what we're doing. Also ask you to contribute to peace. We ask you to contribute to other things we're doing. So we look forward to all that joining today's session, to join the PC, and we'll take the conversations from there. Do have a wonderful week, and thank you for joining us. Good evening. Is the link?